Hi, this is Yogesh. Am I audible?
Yeah, sir, we can hear.
No, just a question to the host, May 27, out of curiosity, as usual. A question to you. Is May 27 got to do with your wedding anniversary or something like that?
Sir, no, sir. Firstly, welcome to everybody, Pramesh sir and Yogesh sir. We got the idea of starting this particular handle on that particular day. So, and regarding the marriage, we are not that old yet, sir. I am just 25 years old. I have finished my MBA right now. So, I would like to make this as my official introduction. I've finished my MBA and now I work for an international bank. So there is another friend of mine who is still pursuing her MBA from the same campus. So she and I, both of us together, manage this account, and we try to add some insights as a second run hobby other than working full time. So that is it, Yogesh sir.
Okay, okay, thanks. But by the way, just to correct you, I mean, marriage has got nothing to do with age. Huh? Thank you.
Yeah, yeah. Okay, sir. Okay, I think we can start now. So that is the introduction, and the topic was the accidental investor actually gave us the idea about having a good conversation about Naval's wisdom and investing. So if Yogesh ji or Premesh ji want to start off on any note, I would request them to share some insights about Namal if they have ever read about him.
No,
I think
not
so.
me. I think Pramesh can
May
go. I mean,
27, you may
Pram-
go
no, no, sir. Y typically comes last alphabetically. So why don't you go ahead, please?
yeah, yeah. May 27, I think so. You should go ahead because that's this is your opportunity. We will chip in.
Oh, great, sir. Thank you. So, for the uninitiated who doesn't know about Naval, he's from Delhi. He stayed in Delhi until he was 5 years old, and then he went on to US. And I would like to give a brief introduction about him. So he went there, and his mom was a single mom, and when she was working hard, he didn't have a space to stay because he was too young. So what he did was in his locality where he was staying in US, there was a library, and until his mom came back home, he used to read everything and anything, like any book that he found in the library. That's how he fell in love with reading and philosophy right from his younger age, and then he went on to become an angel investor. He was one of the early investors in Twitter and Spotify and other companies. So, but right now, I think he is more focused on philosophy rather than angel investing. And one good thing about him is that the book, the novels, the Almanac of Naval Ravikant, is free for everybody to read. It is not like they are making money out of it because he thinks that people have to know about this, and he is more happy to support everybody rather than making money out of the book. So I first came across this book through his podcast and his Twitter threads on how to get rich. So the best thing about his book is that he tells us certain aspects of our life, and he got me thinking about how skewed our thought process is. So, for example, I used to always think wealth building is so important. I finished my MBA. Now I have to focus on building wealth and all that. But I never had a specific figure in my mind. And only until while I was reading his book, I realized that, okay, we didn't even have a figure. So if I earn so much, maybe I will be okay with it. But that point will never come in our lives. No matter how much money we earn, there will always be a next level. Because back in 2014, when I was doing my undergraduation, if somebody told that I would finish an MBA and now set up into a job, probably I would have never believed and said that, okay, that would do. But now I have much bigger dreams. So he talks more about satisfaction in life, and I'll tell you one very interesting thing about him, which actually surprised me. And he said that there is no legacy leaving behind business on this world, because after 100 years, even you won't be there, your kids won't be there, and then your family won't be there. So most of them will not even be believing that you existed. You will be erased from the history. So from that, the thought of living for yourself rather than name or what somebody else would think comes in. And that's regarding the personal philosophy. And coming back to wealth, what he says is people, it's really hard to build wealth by working for somebody in the long term. And he says that owning equity is a very important part of anybody's life, because he wants wealth to work for us. And he says that your assets must be working for you day and night while you are sleeping. And one quote he always says in the book is that if your money is working for you, then you can choose not to. So that is what he says. But nevertheless, it's not like we should not work, but the idea is to own a part of business under your name so that you can build wealth better. So, and a disclaimer that the discussion is only about how investing should be perceived in our life. None of us are SEBI registered, or we do not have any, none of the speaker panel has any advantage in this discussion. So feel free to request if you have any questions, and I would like any of the speaker panel to take forward the discussion.
Thanks for the introduction. I have got my copy of the book, but I am yet to complete, so I won't be able to add much to this. But again, the whatever I have read from his book, he talks about wealth and happiness. So if we, in general, talk about wealth and happiness, every individual is different, and there are different ways how they perceive things, in which background or which circumstances they grew, and what are their backgrounds. So one asset class may be good for you, that might not be good for others, or there are so many to it. But one thing is very important in life: happiness is one thing which should be eternal, right? We keep estimating things that yes, at this juncture our focus should be on careers or earning money or whatnot. But at the end of the day, happiness is not one thing which should be delayed, right? A person should be devoting equally time to his career as well as to his family, his passion, and his areas of interest, because you never know, as rightly said by someone, and Yogesh sir usually quote, only two things are certain: death and tax. So keep on filing your tax on time and don't wait for the others. The second thing, enjoy as much as you can, but again, it should be within limits. Don't leverage yourself in the negative sense, I mean, in the depth, that thing. But as Naval was talking about leverage previously was more labor intensive, but these days the focus is more on code, or maybe the digital era has started. So basically, our focus is like, our work hours should be like, whatever work we are doing for our productivity is allowing us to do that work. I mean, if we can get that work delegated or maybe done from some other person at a lower cost, so the idea is better to delegate that work. So these are few things I remember over this. Ramesh, a very interesting quote you just tweeted some time ago. Can we discuss that for a while, if you don't mind?
Yeah, sure. Why not? You go ahead, and I'll chip in. Hello.
1 second.
Hello.
Yeah, Ramesh,
Yeah,
go
yeah.
ahead.
Yeah. You go ahead actually on that particular quote, then I'll add, because I'm in middle of the book only. So it's a
Oh,
very
Okay,
okay.
okay.
yeah, yeah.
Okay,
Great, great.
let me come to that again. In the meantime, I ask Yogesh sir or yes sir to add to discussion, not specific to novel, but when it comes to creating wealth or maybe happiness, they have any points to add, or maybe in the meantime, we will add more speakers, and if anybody has any questions, we will take up at that as
Yeah, so as regards novel, honestly, I have not read the book, but whatever I have been gathering and reading randomly few stuff, one thing which struck me is one of the uh, thought process is that if it entertains you now but will bore you someday, it's distraction. So following your curiosity is much better than what is hot right now. And I will relate this to two things which I can think of. One is choosing career options, and other is investing, because there is always this, we keep hearing this, right, that there is this particular sector rotation is happening now, and therefore this particular sector is good now, and a few years later it will not be this sector, and therefore this sector is redundant and there will be sector rotation. So that is one thing which I can relate. And the same thing, that follow your, not whatever is hot right now. So on the career aspect, I can say, see, being myself a lawyer, today I was addressing one of the law school students, and I told them the same thing, that don't choose any career, be it law, medical, whatever, accountancy, whatever it is. Don't do it just because your parents have dreamt about it, or your forefathers thought you will do it, or just because your neighbor is doing it. Don't do or enter a profession just because it will make you money. I'm not saying money is not important. Honestly, for me, money is 99% important. Balance, but money is definitely important. The point I'm making is, whatever you study, say you're studying law, for example, you will study it for 5 years, you will become a lawyer. Great. Good luck to you. But then the same enthusiasm, the reason for which you entered that profession, you chose the profession, you have to sustain it for next 50, 60 years as a practitioner, right? So if you get bored, and your situation shouldn't be basically like a soda bottle where it fizzles out, because you have to sustain it on a daily basis. So just imagine, so where will that enthusiasm come from? It will come from within. So this actually, this particular part of the book, or the relevant extract which I have read time and again, and which I tell, including to my both my daughters also, that guys, this is so true. I mean, if you sit back and think of it, I think I stand by this quote, and at least for me, I have always lived my life by this particular quote. Thank you.
Thanks, Yogesh sir.
Right, right, sir. Yogesh, sir, any thoughts on owning equity as a part of investments? Because Naval keeps on saying that unless you own equity, you cannot build sustainable wealth and retire early or choose to do what you love. Because most of the times, many of us
Yeah,
end up doing jobs that we don't like, or that we thought there are some other jobs, but once we join, we understand that this is not what we love and this is not we are passionate about. So he says
correct.
that if we invest in equity and own a part of equity business for many years consistently, he says that we will get an opportunity to take back our time because of the wealth we built, and then with that time we can do what we truly love and what we truly enjoy doing passionately. So, what are your thoughts on owning equity for sure as an investment to build wealth?
Yeah, so see, I agree with that. I mean, statistically speaking, last year equity as an asset class gave around 14%, as compared to any other asset class. And yes, insofar as I will speak for myself, I am 100%. I am 100% invested in equity. That is one. I don't think, with due respect to Naval as a writer, I don't think, unless you tell me otherwise, he envisaged cryptocurrency investment, because this statement that equity will give you good returns and all needs a carve out. Because today I was just before space, and I keep entering, unfortunately, in wrong spaces which discusses crypto, and whenever I send a request to get added as a speaker, I am never added, because everybody knows my views, at least personally, around crypto. Anyways, I have nothing against it. It is just that uh, equity will give you good return. I think the carve out being crypto, because crypto perhaps give you even better returns than equity is what I understand. I am not invested in crypto. I am not advocating it, although being an advocate. The point I'm making is I will never invest unless it is quote unquote regulated by some regulator in India. Whenever, sorry, I may be digressing from topic May 27, but I just want to give an example, and many of you may have observed it. I have nothing against that particular product as an investment. It is just that whenever I ask this question, I don't get an answer that what is the underlying there, or why should it be recognized as an asset class. The argument which I get in response is that, oh, there is a distributed ledger technology, blockchain and all. So I think there is some disconnect somewhere, because I'll tell you what, if you read the cryptocurrency banning bill which of 2019, which was which is an annexure to the SC Garg committee report, which is an 100 almost 100-page odd report around banning in India. They have done a thorough job by even researching and looking at all other countries, how they are looking at seeing crypto as a currency or as an asset class. In the cryptocurrency banning bill, there is a specific carve out for blockchain technology, distributed ledger technology. Nobody is against this technology. Let's be very clear. The limited point is crypto is not a currency, not an asset class, not a commodity, is what is proposed. So, whenever I ask this question, I honestly don't get an answer. That is one aspect. Second aspect, see, we in India, we know how much we are grappling, all of us, in educating our relatives, family members, friends on financial education, on financial literacy. People are the other day I was on a space where people were afraid about Indian market valuations and all, but everybody was okay investing in crypto again. I asked the question, honestly nobody has an answer. So the larger point being, to sum up, there is a regulator in India to regulate securities market. There is a regulator in India to regulate banks, which is RBI, SEBI for securities market. There is a regulator, IRDA regulates insurance, PFRDA regulates pension fund products, etc. etc. But yes, we can debate on a separate space how each one of them are doing their job, good, nice, bad, ugly, whatever. That is a separate point on enforcement aspect of the regulator. But the limited point is, a financial product which is not regulated, you are happy to invest. But a financial product which is r- not regulated compared to regulated, just imagine what kind of risk you are taking. When I ask my friends around me that, boss, you are telling investing in any stock is dangerous. You are telling me investing in F&O is also dangerous. Direct equity, you will mutual fund will say, "Arey, I don't want to pay 2% to the asset manager. But you, I am not one 8 crore demat accounts or whatever the entire population. So even if this 8 crore, imagine the level of financial literacy. But within this universe of 8 crores, there is some population which is perhaps okay to invest in crypto. But you don't know anything about equity markets. I'm not saying I know everything about equity markets. I am also learning. Although I'm being a lawyer in capital markets for last 2 decades, I am also learning on a daily basis. But having said which, I am lost actually. Unless somebody can please guide me, what am I missing here? Thank you. Over to you.
Yes, sir. Even I think the one of the very few points which I do not share the same optimism that Naval has on is cryptocurrency, and he has been a vocal supporter that someday cryptos will go mainstream. That is what he believes in. But even that is not something I believe in. Actually, if you look at the numbers of number of people who are investing and the investor education that we have in India, if we see that even now there are very few people who invest in mutual funds for number one, and for number two, the problem is that even among those numbers, many people don't even understand the difference between direct and a regular investing option. Many people still stick to regular funds, and they don't know that there is a cost arbitrage between buying mutual funds directly and buying mutual funds through distributors. Why I'm quoting this example is because the mutual funds which have been here for decades, and there is a lot of historical data that is associated with it, and there are many people, veterans, who have been suggesting us to invest money in mutual funds and build some meaningful wealth. Even here, we still lack investor education, and most of us do not even know what are the benefits or what are the things we need to look out for. And we have Shankar Nath sir along with us, and he has been doing a fabulous work on mutual funds and how to pick them and all other things related to mutual funds. So, despite so many people trying so hard, we still have this knowledge gap, and even index investing and passive investing are going mainstream only in the last few years. So, my problem with cryptocurrency or all the other coins which are coming is I won't say ki I will stay away completely from it. I will never ever look at them. But unless and until I have a comfortable feeling that, okay, I understand them, this is the value they're adding to the world, and probably that value will be valued in some way by investors. I need to have that kind of conviction from my inner self, and only then I can actually think about if we should invest or not. But what the point that I'm trying to make is there is a lot of work to be done as far as investing in mutual funds and investing in the capital markets itself is concerned. So I think they are just like with the advent of all the easy brokerages and one click away investing apps, though there is a lot of good that is happening, I also believe that there is a lot of bad happening on the other side, which we are not paying attention to. For example, now we have all the exchanges which are offering one click away cryptocurrency buying and selling to. So we have made it so easy for them that they hardly stop for a minute and think if we should invest or not about this hard earned money. So that is the problem which we have on the other side. So, yes, sir, I completely agree with you. And one of the points that I don't agree with Naval on this, compounding has requested to speak for a while now. So, compounding, you can go ahead and share your thoughts. Thank you.
Hello everyone. So I'm agree with Yogesh sir that I too don't agree with Naval's opinion on cryptocurrency. I like few of its thoughts. That doesn't mean that I agree with every point he has. On one point I agree with him strongly is that we must invest in equity. Forget about returns. Uh, Most of the people around us will say that equity give 14% return, 15% return, and stuff like that. Even if equity doesn't give any return at all, just to say that even if it doesn't give any capital return at all, I will still invest. I will tell you why. In this world, we can make money only in two ways. One is that we have to provide service for others. That is that we may work in a bank, so we will go service for the people who come to us. We may have a restaurant, we may give service to the people so that they can pay us money. So the other way of making money is that we have to own something that gives service to others. That we may own a house that gives service to other people who will rent that, or we may have to own a company which gives service to them. So there are only two ways to make money. One, we have to provide service for others, or we have to own something which provides service for us. So equity comes in the second part. One thing I like about public listing is that you can try it with yourself. Go to uncle or any relative of yours who runs a successful business. Let's say he has a turnover of 1 crore. Go and approach him like that. I will give 10 lakhs. Will you give equity? Like he will be the first one to disconnect you. So that's but most of the people around us, let's say relatives or anyone, most of this they don't like to give a part of their ownership in their business. But one thing I like about public investing is that every company, most successful companies are there. Like in public listed companies, some of them are doing bad, but some of the few companies are exceptionally doing good. So these companies are ready to give us their part of the ownership. And even in some good times, like when other people uh, do fear and sell in a crash, we may even get such business at a discounted rate. So it's better to own them, even if it doesn't give capital return. Like I will say, valuation is a perception. Even if the perception becomes bad, and even it doesn't give a capital return, dividends will come into play, and dividends will keep helping, and earnings power will keep increasing as we day. I can easily say that. Just consider an example. You go to a tea shop, like imagine whatever tea shop you have gone 5 years ago. That time you may probably uh, purchased a tea for 7 rupees. So you are a customer. The shop owner is the one who does the business, and he earns the money. uh, you can visit again them now. It may be probably at 12 or 15 rupees. So the price has clearly increased. So if we stay a customer, inflation will hurt us. So if we become a owner, inflation will help us. At least it will maintain the uh, it will maintain our wealth. That's what I think. So if we own a equity, we will be protected against inflation because we own something that gives other service. So we decide the pricing power. So and the government will keep on printing money. I will easily say that because it helps in the larger picture. Like there are so many poor people around us. So if we have to lift them, we have to boost our economy. So they will keep some good inflation. Even RBI mandate is to keep 4 to 6% inflation. That's what they are mandated to. So the inflation is here to stay. So if we are only a customer, we will get hurt in the long time. So if we become owner, we will be protected against that. That's my opinion. Thank you.
I agree, compounding. Another point when you said about public listing, what got into my mind was though there are a set of corporate governance issues that still happen, and there are certain cooking of the books that still happens. What I personally feel is markets have been maturing in such a way that it is getting increasingly hard for people to cookbooks. One such example is initially there was no rule that we should be sharing the con call transcripts, but recently SEBI has came with that rule that they have to share them. Initially, they used to share it on a voluntary basis, but right now they have made it on point that everybody must share the con call transcripts. So, likewise, there are many things that are happening, and in public markets, we have a regulator, like how Yogesh ji said, and there is somebody who is looking after the minority retail investors, and we have a system, we have an idea how things are working. But when it comes to crypto, they say that the whole point itself is about decentralizing. It is all fine, but I am still not sure if every single person should be comfortable with the fact that they don't know who's running the show, who's running the business, what's going to happen. That is the point. And thanks for sharing your insights, compounding. Dr. Dhiman sir has raised the hand. Sir, please, sir.
May 27, if I can interrupt
Good,
before doctor starts, you will have to add AI as a speaker. Doctor, please go ahead.
Sure.
good evening, everyone. So I am late 10 minutes. I don't know what you have discussed in first 10 minutes. But what Naval has said, as far as my tiny knowledge is concerned, he has said that seek wealth, not money or status. Now, wealth is having an asset that earn while we sleep. Now, regarding wealth, what we mean? We mean money. But wealth is more than money. According to the World Health Organization (WHO), according to their definition, what is the definition of health? If you know this, I don't know whether you know or not. I am just enumerating the definition. That is, health is a state of complete physical, mental, social, and spiritual well-being. That is a complete holistic approach, and not merely absence of disease or infirmity. So, health, physical and mental, spiritual and social, all these things come under wealth, not only money. Money is a very tiny part, very important, but very tiny part of life. If you don't have good physical health, if you don't have good mental health, or if you don't have any spiritual attachment, money won't do anything for you. That's for sure. I have seen many patients, they are not only crorepati, they are arabpatis, but they are very unhappy. I have seen patients, those are bedridden, who has got crores of money in their bank accounts or in their equity. Everything is important. Bank account important, equity is important. But what I am going to tell you is that health is most important. Physical health, mental health, spirituality, meditation, exercise, social connection, be contented, and the most important thing, what I feel, what you are earning from anywhere, maybe from equity, maybe from your job, giving is more important. Giving back to the society. In a society we are living in, suppose we are arranging this space is not for discussing the money's purpose only. We are helping people. We are also enriched and we are helping people. Am I right? So I feel helping others is a very important thing. Very important thing. If you earn 100 rupees from stock market, you should give back 10 rupees to the society. What I do, and what if you have gone through my timeline, you have seen that I regularly try to do something for the needy, for the poor, for the uh, in the last year January we had a very big program, and so on. Every week I do so. Every Thursday I do so. In fact, so wealth is not merely money for me, because I have seen many unhappy faces with a lot of money, and I have seen many happy faces with, you won't believe it. I have got a personal experience. Can I share here?
Yes, sir. Yes, sir. Please.
Okay. So, uh, I don't know whether you know Kolkata. If anyone knows Kolkata, I was then in IPGMR and SSKM hospital, the biggest hospital in Kolkata. So every Thursday, it is a ritual for me. I give some person, some might be poor, might be rich, doesn't matter to me. I give something according to my tiny income. So that was 25th or 26th December 2010 or 9. I can't remember exactly. I was very busy at that day at hospital. So I couldn't extract my time. That was 10:30 around. I couldn't feed anyone on Thursday. So I went out. We went out and purchased 5 packet of biscuits from my canteen and went along the road that is in front of, there is a gurudwara in front of our SSKM IPGMR hospital. So I got 2 persons there. The road was completely empty. On the right side, I went up to Eden Gardens. No one was there. Then I came back. I went towards the Netaji Subhash Chandra Basu's house, that is Netaji Bhavan's. In front of Netaji Bhavan, Netaji Subhash Chandra Basu's home, you won't believe, a person was sitting there. He had no cloth. You won't believe, just wearing a very torn half pant and nothing else. I just offered him the biscuit, just offered him. And he told something I couldn't realize. That was around 11 p.m. at night. You won't believe, the temperature would have around 10 degrees Celsius. And the person, and I told him, this is for you in Bengali. But he told me, nahi chahiye. I was astonished. I told, आपको कुछ देना नहीं पड़ेगा, हम ऐसे ही दे रहा है. And he told, हम तो बोले हमको नहीं चाहिए, हम तो मांगा नहीं है आपसे. So this is called wealth, the power of giving. If God doesn't give you the power of giving, you won't be able to give. What I have just told before, that you are earning and you are giving. But the sense that I am not giving, God is giving, this spirituality is important. This is the part of wealth. If you go through physical quality of life index, now this is a very big first chapter, physical quality of life index. Who hasn't read community medicine won't realize this particular thing. Physical quality of life index is a particular thing that wealthy people have. Money has nothing to do with it. Sri Lanka is much more ahead of us in physical quality of life index. They are much wealthier than us. Kerala is a state that is a very wealthy state in respect to Punjab or Haryana or different states who have got enormous money. I have told already, I have seen many patients who are very much. I will tell you that they have got 14 or 15 cars, might be only. They have got bungalows, they have got cars, they have got everything, but they are not happy. That is not important. So, what is my point is, it is a holistic thing. You need money, definitely you need equity, you need gold, you need all asset class, but your mindset should be that your time limit in this particular life is limited. You never know. You may die just even after birth. I may die tonight. Tomorrow, someone may die. One may live up to 8 years. Your time span is limited. So, what is important not only to earn but is give back to the society. That is all. Thank you.
I agree, sir. That was very warm of you to share your experience. And one thing that I would like to add on this is we generally tend to wait for some time before helping somebody because personally, even I have been to this space, but now I'm changing my thought process. There was a time when I used to think that, okay, right now it's not like I am in a position to help somebody. First, I should earn some amount of money, and only then probably I can start helping somebody. But that is not the thought process that I have now, and I think that whatever you're earning right now, you should consider contributing some part of it, and do not wait for a specific time point in your life ki okay, let me grow this soul, let me earn this much figure of money, and only then I can start working. And one more point regarding living life as it is, Naval says this one point ki when you're randomly walking on a road, 95% of the time you are either thinking about the things that you have done in the past and regretting about them, or you are thinking about the things that you are going to do tomorrow and get worried about them. But you fail.
Hello. Am I audible?
Hello? Yeah, I'm sorry. I think
Oh,
I was lost. Yeah. So he
okay.
was saying that
Please carry on.
yes, sir. So he was saying that you have to start living in the present. And if you cannot live in the present, there is no point. Because you have highlighted the importance of happiness, I am adding this point. And he also said that when we are young, we spend a lot of health and time on earning money. And then at some point in time, we will have health and money, but we won't have time because we want to earn more. And by the time we grow old, we will have money and we will also have time, but we won't have health. So rather than completely slogging it all the day and working so hard for money, thinking that we will use it in the future, I think every single one of us should have some time and do something interesting in our life so that we are happy, which we truly love. And Punit sir has been,
The journey is more important, I think,
yes, sir, 100%.
rather than the destination.
Yes, sir. And thanks for bringing up the happiness point, sir. I really love that. Moving on, Puneet sir has requested to speak for some time now. Sir, is there anything that you would
I
like
have a
to?
question. I have a question for Puneet also.
Yes, sir. Please go
Hi,
ahead.
Puneet. Hi, Puneet.
Yes, sir.
Was the
How are you?
temperature at Sydney now?
Sir, it's good. It's actually summers these days, so we get actually
Okay.
sunset close to 8:30 in the night.
Okay. So you're enjoying.
Yes, we enjoy
Okay.
summers here.
Carry on, brother. Carry on. Okay. Thank you, everyone.
Okay. Like, um, not exactly I've read the book and the thoughts, but yes, I'm just coming to some data points which we discussed yesterday in some space. I'm just repeating something about crypto and how actually the mentality of the people, young versus mature, is different. So if you talk about India, the average investment for the cryptocurrency is 9,000 per person. Time period for cryptocurrency launched is few years in India with an average investor age of 24 years. Crypto has 10 crores of investor base in India, whereas in equity, if you see, it has been a long like 20, 30 years, but the investor base is only 8 crores. So now the difference lies uh, vers- uh, mature investors versus new investors. It's not a I'm not saying that we we are mature not to invest in currencies, or there are young generation who are very much intelligent who are investing in cryptocurrencies. So it's not a debate what that I would say in that sense, but I would only say people should know before they are investing. As in equity, they know what is short term capital gain, long term capital gain. Often they should know what is actually taxation part for cryptocurrency. So often if you take a cryptocurrency and hold it for 36 months, I think so there is a different taxation for. But most of the people who I like speak to here in Australia, who the people who come to me like asking about technicals and everything, most of the people I have met here, all the Australians or any other people, they mostly come to uh, ask how to actually trade in crypto. So that's the basic and the first question they want. Do you teach that, or do you know how to do that? So there is a definitely a paradigm shift. There is definitely a thinking shift that is happening all around. Uh, Change is often better, but we don't know what it will go through and how it will go through. I remember a line in Hindi what some elders used to say is दुर्व्यवस्था से सुव्यवस्था का रास्ता अव्यवस्था से होके जाता है. So we don't know whether in what situation we are actually in. Is it a durvyavastha? Is it a avaivastha that is going on, or it is a suvyavastha that will be coming in future? So not to say about that, not pinpointing about that, but if crypto has to be like admired by the investors, the big investors, because if you see the data, that is very the people who are below 24 age and they hold that is somewhere close to 9,000 rupees. That is not much. So if it has to go through, it has to be somewhere being regulated by NSC or BSC. If you see, these things are yet not like there on the platform, so that each and every investor is like happy to do, or they are like uh, they are very much interested to do these things on these platforms. Because these things are not available on these platforms, there will be some gestation period if it is going through in a phase where people will be investing, or it will be in a hold period. What in the last Supreme Court order has said that they're not doing any ban, but they're just holding it. So anything hasn't come up by the government as of now to say that it will be uh, a new, you know, avenue of investment, or it will it will be just like that, or it is going to be like another avenue of investment which can actually be a very good asset class. So just those remarks. But there are various things that I can say is, apart from cryptocurrencies, people are talking about the investment options. And investment, I have read somewhere where people say that investment equity should be treated as a second child. If you invest into good companies, or you invest into India. So what I have learned from when I was used to work in India in mutual funds, that they say you can make money anywhere in the world, but if you have to make wealth, you have to be in India. That is Indian markets. So it hasn't even started. There are many things that are yet to be started in India, because if you see a big change uh, worldwide, what is happening is, if India is the largest producer of milk, let's say, but still they can't earn, or they are not earning as per other countries are doing. So let's take an example of Australia and New Zealand here. So New Zealand is basically a agriculture or a dairy producing country, but still they earn better on the amount of milk production they do. Is why? Because they're not selling milk, they're selling the byproducts. They're selling butter, they're selling cream, they're selling other things. So it's a very wide range where you can decide how to invest, where to invest, and what model you should invest. So we have different things lined up with us in the markets, which can be in terms of crypto, which can be in terms of good companies, which can be in terms of mutual fund investors, which can be in terms of like direct equity investors, some different asset class like gold, um, silver. We have recently seen that silver ETF has also been launched by some mutual fund, that is Prudential ICS, I think. So I was seeing some time back, or some other mutual fund. I don't remember anything. No recommendations or anything. Nothing on that space. But yes, there are other products. So not criticizing investing in crypto, and not in favor of crypto. I haven't even like tasted it, but yes, it is a avenue that is coming up. Um, so that's what it is. So yes, I would just like to say that I was just trying to quote those examples and data.
Um,
Completely resonate with you, Puneet sir.
um, May
Uh,
27,
uh,
sorry to interrupt. May 27, you will have to remove and add back AI. Sorry. Please go ahead.
Sure, sure. So, sir, with that point regarding the cryptocurrencies, I share the same opinion, and I think I'm hoping that this budget should give us more clarity on how they are going to fare and how the government is looking forward to recognize them.
Hmm. Let's see.
So, so probably once we get the idea, I think it will be better to understand it. And another point, sir, irrespective of the asset classes, being it crypto or mutual funds or direct equity investing, I think the bigger question is about the investor education that we need to have. Like there are products which can help us, and we see that India is actually moving in the right direction, like you have mentioned. But what we should also understand is that we need to be part of this growth, and if we need to be part of this growth, we need to understand it first. So what do you think, what are the things probably we should do to understand better and invest rather than going with the herd or buying things with borrowed conviction?
Okay, my answer could be very short also, very long also. Let me take this. Uh, if you see what's happening, how people started investing. So I basically like to invest into commodities. It's not commodities like I want to invest into gold or thing, but yes, I read a lot about commodities, and I have been investing into commodities a lot. So investing into stock market or investing into equities is definitely commodities a part of that. Now, to get wealthier, richer, one has to understand what he is doing. So if you are just thinking that being an Abhimanyu, you can win the war, so that's not there. You have to be Arjun. You should know how to go in and you should know how to go out. So since I'm just talking about commodity, for example, here, so there has been like uh, people have been investing into this kind of investment thing for so long. Now, if you see the commodity cycles have already passed. Today, it's like expecting they're in a mini cycle, fifth is going on. There has been various things how people see and how people invest. It's not only technical charts, what people just say that I can tell anything by seeing a chart and what the price should be next day or 10-15 days. There are people who have confidence in saying that I am also a student of technical analysis, but I do read fundamental analysis. Time has changed. One has to realize that in what company you are investing, with fundamentals and with what technicals it is going in the market. So if somebody is only blindly investing in a stock which has just risen, let's say 10% in the last 1 day or 1 week, and he's just thinking that it will go another 10%, and the second day it will go another 10%. I think so that mentality, the herd mentality, should be stopped. You should know what is the fair value of your investing. स्टॉक छूट जाता है कोई दिक्कत नहीं है, इन्वेस्टमेंट छूट जाता है कोई दिक्कत नहीं है, इक्विटी एसेट इज स्टिल लाइव. Try to find different things where you can invest, find a proper entry price, because that entry price will actually be a very much pivot point when you are exiting, to calculate what return actually you made on that investment. What people should do is, let's say I'm a more commodity investor, so just not investing into companies, let's say mostly I talk about steel companies, iron ore companies, things like that. It's better to always invest into companies who are like integrated, so not into the companies who are not integrated. So uh, if we are investing in a company those are integrated, that actually reduces the cost of input, which actually helps you to gain margin on the output. So if you are studying these things, that actually make you a wise investor. For example, there are different chemical companies. In the last quarter, that happened in the December quarter. So many raw material that was coming from China had actually a spike of 80 to 90%. What happened? We all have seen that there is a big price correction in the chemical stocks, the API stocks, the CRAM stocks, because much raw material has been imported from those companies, which the companies could not pass, and that is reflecting in the price of the companies. Similarly, in the commodity companies, steel is in demand. I'll not go into that chapter. We can definitely have a space regarding that because I can speak on commodity particularly. I'm basically a commodity investor. So what happened in steel thing? Steel is going on with a good demand. With this COVID thing, there has been a uh, new kicker to this cycle, which has actually kicked up the steel demand all over the world. Now there has been other things also that has kicked up because of this huge budget that countries are actually allotting for you can say the liberalization, the new kind of infrastructure development that everyone is doing. So just for a small for just a very small example that I would like to quote is there has been demand from these segments, um, the kind of energy transition that is going on these days from the traditional one to the renewable ones a lot more than expected. So if you see, there was a demand of 15 to 20 million ton, which is expected to reach to 90 to 100 million ton just because of this transition. There is a huge demand. So one has to actually see that you are entering into these companies, you are entering into these businesses at a very reasonable price, and you also exit at a very decent price. So if somebody say that yes, let's say for example, uh, in a steel company they invested at 1250 or 1300 something at Tata Steel, and then it went to 1000, and then they will blame, oh, there was a demand in the world. There is a huge demand that can start from 15 million ton to 90 to 100 million ton, but my stock price is down. So boss, who said you to invest into the stock at those levels? Now here the time comes when you need to analyze what kind of company you are investing in. Before company, you should analyze what kind of business you're investing in, at what levels you are investing in, and what levels should be the exit levels. I have seen in 2008, where I remember, yeah, 2008 downfall, um, where Tata Steel from a price of 600 or 650 was trading at 140 levels. Now, if you sell the Tata plants at those time, even the intrinsic value was more than that. So now, if one would have invested at those levels, he would have definitely reaped much profits. Now, if some person has invested at 600 levels and the stock goes to 140 levels, then he would be like cursing himself, because steel cycle what it actually it started um, recently was in 2000, which start which was till 2014, and for which a peak was somewhere around 2006-7, and then a peak was in somewhere around in 2011. But if you have invested at the peak levels and then you have to wait for all these 7-8 years to like get your stock to the same price or to price above than that, little bit above than that, so you actually gain some profits. So you should know what type of investments you are doing on and at what levels you are doing. That is very much important. One cannot just create wealth, because we are not, let's admit it, we are not Charlie Munger and we are not Warren Buffett, that we have ample investments and we are earning so much dividend that if the stock goes down of XYZ company, we have 10 companies, we get some dividend, we average our portfolio, or we buy some company at a low price. We are normal investors. So we should be very much careful in not actually buying the ideas, but actually researching the ideas. So if we are doing that research and then investing, that should be the actual scenario, what we should do. If I talk about uh, uh, if I talk about like this the whole scenario that is happening on, any investor can actually get the maximum profits from a company where he research a company which is backward integrated. This is what reduces the cost of the last product and improves the margin. Apart from that, he has to take help from some technicals also, so that it helps him to get a price that actually saves his investment. That's what I want to say. On commodity I can speak a lot, but yes, I don't want to go much into all those things because we are not into that kind of discussion today.
Agree, sir. Thanks for the thoughts on commodities. I think one biggest takeaway about what you have spoke until now is probably that the entry and exit are very important when you are trying to invest in commodities. And if you end up on the wrong side of the cycle, then probably it will be very hard for you to recover or get back your initial investment price. And I think a lot of awareness is needed when we are trying to invest in commodities. So, to all the listeners, if you really think you want to invest in commodities, do your own research and please make sure that you know what you are doing and why you are investing the money. And now I'll take forward the discussion regarding the specific
I
knowledge
am
that Naval
interrupting
has.
you.
Yes, sir. Dhiman, sir, please.
Yeah, Puneet, that was very nice. Keep it up. Just keep it up. Thank you.
Sir, sure, so sir, we'll discuss about commodities some next time. I'll come up
Okay,
with you with
definitely.
many good
We'll
points.
look forward.
It's a vast subject, so it needs
Yeah,
a lot of discussion time. Not
we have a
here
plan
because
also.
it's yeah, we'll do that. We'll do
Okay,
that.
take care. Take care, buddy.
Yeah.
Yeah, true, sir. It actually, I don't think a small sub part in a session would do. We will entirely need a different space if we have to discuss commodities, and you can definitely share your thoughts on it. And now going forward, regarding the special knowledge that Naval talks about, he says that if you want to become something truly good at, he says that every person should develop this special knowledge and you should be adding value to the society in such a way that most of the people cannot. So, for example, today we pay money to mutual fund advisors, or we generally pay money to certain people because they are good at something which we are not. And so, his whole idea of developing yourself comes from the point that you will always identify that you are good at something and you are passionate about something. Now we can see that Puneet sir is interested in commodities, and whatever he has discussed until now gives us an idea that he is passionate about it and he has the awareness to it. So if I am someone who is interested in commodities but don't know where to start, it is only obvious that maybe I will reach out to Puneet sir and ask how can I start researching or analyzing the commodity investing. So same way, if you are not somebody who is too much into investing and reading thousands and thousands of papers or analyzing companies, you will always try to approach a financial advisor, right? So here, the specific knowledge is a financial advisor having awareness to advise people on investing. So Naval says that you need to develop that kind of specific knowledge, and it won't come overnight. And like Yogesh sir already added one particular small percept from his from Naval's writings is that now we see many people who are interested in investing, and I see that long-term investor as a name. I see that 24. So we have different names that come by, and what I generally see is that I see people who keep talking to me and say that they are very interested in investing, but after a point in time, I see them that they do not continue to be active about investing or something. It there is nothing against them, but I'm glad that they have realized after a point of time that okay, they thought that they're passionate about investing, but they are not. So for all of us, it is important to be aware and understand that okay, yes, I am passionate about something, and then you go forward. You think it is important for you to understand what you are passionate about, and then put all your 100% efforts into it. For example, now I and Prerna, we both are very much interested in investing, and for the past few months, we have been trying our hard to improve this special knowledge. So once you get to that special knowledge and once you do it consistently, compounding is not a concept of only money or wealth. Compounding concept applies to every single aspect of our life. Right now, if we are in this space trying to learn something, it means that we learned about commodities from Puneet sir, we learned about humility from Dhiman sir, and we have learned about why cryptos are not still ready from Yogesh sir. So for this one day, we have learned something, and this is definitely going to compound in the coming days. This knowledge will definitely compound. So that is Naval's idea of having specific knowledge and how it compounds over a long period of time. And We have very senior most people here who have been working and who have been in the markets for so long. So I would request any of the speakers. Anup has been waiting for some time now. I would request you all to share your thoughts about why consistency matters and how our knowledge or our efforts compound over a period of time. Over to you, Anup. Sorry for keeping you waiting for so long.
Hi all. Yeah, am I audible? Hello.
Yes, Anup, you're audible.
Okay. So thank you for giving me opportunity to speak here. So I would like to share quick two stories. So one about we are talking about compounding and how it applies to every aspect of our life, and we are talking about wisdom and happiness in our life. So one story is like why we should invest and why we should promote investing culture in our friends and family is I'm trying to say here. So this story is about three generations. So my grandfather used to do farming in village, and his siblings were also doing farming, but he changed his thinking by educating his children, that is my father, and he sent him out of his village to learn more things. And my father got education and he spent his entire life as a professor. But there was one change at this generation. After that, my father spent 30 years at one location, spent educating children, educating students at one taluka level, district level place. But he thought, life is not only consigned to this place. I should educate my children more and give them more learning opportunities. And he taught us with his entire life spending and his by like doing hard work, so that I came to Pune. So this is the how compounding works. So we are in this world where our ancestors have placed so much of hard works in our personality, and we should do justice to that, and we should try to learn new things. If we want to change and if we want our future generation to do more than what we are doing or what our ancestors have done, we have to do things differently. And that's where learning comes into picture, and that's where these new avenues of earning also comes into picture. And whatever experience I have, I can see that Indian equity market or Indian equity products have huge potential, that current generation and coming generations, with application of their knowledge, they can earn more and learn more in this ecosystem. But if all of you can pitch in and can relate to your own inspirational stories at your house, you will understand how the compounding works. I just give one small example how generations work, and that how results into future. That is about compounding. And to talk about happiness, so as a salaried person, as a working person, I see more people doing only work in their daily routine. And due to, especially in last this pandemic 2 years, everyone is like stuck at home. There is no work life balance, and people like they are working entire day, like there is no 9 to 5 timelines for specific people. So this should not happen. At the same time, we should, like, we live our life only once, so we should pursue our hobbies. We should try to learn new things and implement them in our life, and that's what gives us happiness, I believe. So apart from job and our daily routine, we should have something in our daily routine that gives us happiness to our individual, which defines us as an individual. So I'm not speaking only like, so I have implemented this, and that's what I would like to share here. So in when this pandemic started, I got married just 1 month before the pandemic, and we both of us newlyweds were in put into lockdown for last 1.5 year. But we didn't spend that time like we are stuck here. We always had that plans of going out, uh, like everyone does. But we spent this lockdown very beautifully. We try to learn new things. We try to learn new skills like cooking, and that these things make us individual as independent, which helped us to survive these 2 years in lockdown without any additional help. So this we took this pandemic as opportunity to learn things and become more independent. Also, this gives us very much time at home, so we try to learn things out of our profession. Like, we should not learn only what needs to our job. We should try to learn new things which will help you to become uh, more insightful and more enthusiastic person. So spend some time in your daily routine for yourself. So how I did that? So after I started reading, so I had a habit of writing notes, sharing with among family and friends. But some of my friends shared that you write so well. Why don't you write a book? For initial, I thought how this idea would not come into my mind. But some of my few friends inspired me to do that. So I said, why not give it a chance? I have time at home in this pandemic, so I tried to write things. So whatever poems, thoughts I had collected, I this thing I collected together, and I wrote three ebooks during this pandemic, and I don't publish them via using Amazon Kindle. So that is what a new experience for me. I never thought I would write and publish my own book by sitting at home without any publication or physical intervention. So that's what I would like to share. Like, we can do things even if we take them seriously, spend our time wisely, and that's what happiness for me. Like, those are the 2 cents from my.
Thanks, Anup. Firstly, one thing what I observed is it's really nice that you are taking so much positivity out of the events that have happened in your life. It's really nice to see how positive you are about things. And I would like to share one of my experience as well. When I said that I would like to pursue MBA, most of the people in my own family, they said that. No, now MBA is such a big cost again. Why don't you start working and help your family? Why do you have to do MBA right now? Why don't you get a job that will pay you some 25,000 or 30,000 and then you can help your family? I felt so demotivated that it clearly showed that they are thinking that we cannot put this much amount of money on this guy. If we put so much MBA fees on him, they're not even sure if my family would survive or they would get their money back, or they weren't sure if I could save my family into a better situation, or am I pushing them into a much bigger problem by going into MBA. It felt so demotivating, and I almost questioned myself, thinking, Is this what I am? So, this is what my family thinks about me, and they don't think that I am capable of. But just 2 years, I'm telling you, you have no idea how much confidence MBA has given to me, and the amount of knowledge that I have acquired in the last 2 years, and now that I'm trying to share and learn together. I haven't learned that much in my entire life. These 2 years have changed my life, and I hope even these books will change your journey as well. And I'm really glad that you at least have friends who are motivating you to try it out and do something. If I would say that I'm writing a book, at least half of my friends would say that is it a joke or something. You are lucky to have friends who are motivating you to do better, and I'm happy. Please pursue this, and what you said completely makes sense, that we should keep pursuing things other than work. And it was
Yes,
wonderful that you shared your thoughts, Anup. Thank you.
yes. Thank you. Yeah.
Yeah, we have Gautam with us. He has been waiting for some time now. Yes, Gautam, please go ahead and ask the question if you have it for any specific panelist out here.
Yeah, thank you very much. My question is that how is for a retail investor, it is very difficult to know the management. So, how to know the good managements of a particular company?
Anyone from the panel would like to take it, sir?
Yeah, Gautam, you can actually, this is Puneet. You can actually read the con calls which are readily available. You can even get these con calls, those are available on the YouTube also. So I can tell you one website. I just don't remember the right now name. Let me just give you the exact website where you can actually find the previous con calls of the company, which gives you actually great knowledge to actually know about the company. So let me just forgetting the name. Mm,
Puneet sir, adding on, we have the
yeah.
screener website also where the con call transcripts are listed as per the quarter. All the con calls are there in one after the other. And I think we have Trendline, which is sharing the con call audio clips as well. And we have a website called Research Bytes. So, adding on to what Puneet sir said while he's checking for it, Gautam, what happens is there are two, three ways that I have at least identified how to look for.
Can I add something?
Yes, sir, Dhiman sir, please go ahead, sir.
So first of all, I am Dr. Dhiman Bhattacharya. So first of all, the first thing I generally see as a retail investor, as a beginner, you can say, if I am a beginner, I would first search for the company, whether the company is fraud or its promoters or other management persons are fraud. What to do? Nowadays is very easy. Go to Google and just search type the name of the company and search fraud, legal cases, all those things in front of that. That is a very easy procedure. Google will give you some ideas. If you don't get it, just type the promoter's name and also they can fraud and all those things. Once again, you will get an idea from there. If you don't get any idea from there, you then go to the DHRP, the red herring prospectus, as you all know. Now, suppose you are invested in a particular company, say Infosys. So, how would you get the Infosys red herring prospectus? So again, you have to go to Google and you have to search for red herring prospectus of Infosys. Now we read the whole thing in detail. Another important thing is the salary of the management. Salary of the management is also very important. I know very well, very at least 20 to 30 companies. Those are in laws, but the management is taking so much salaries. There is a company in Nifty 50 for last 20 years which is giving more than 20% return. Some noise is coming from background. So that is giving more than 20% return. That might be an exception, but that company's management is taking extra money. And another thing is sometimes what happens, there might be two companies of a particular promoter. One is A company and one is B company. Now, suppose this A company is listed into the stock market and B is not listed, that is a subsidiary company. That might be that B company has some fraudulent actions. So you go to the particular company and search for that, whether there is an illegal case or any fraudulent actions there. Another thing you can do, that if any money is being laundered to that particular B unlisted company. And another thing is the management or the promoters might give money to their friends or their relatives free of cost or free of charge or at a minimal rate. And another thing is you can is it boring? Should I continue?
Yeah, yeah,
Yes,
sir.
sir, yes,
Please,
sir,
please
please.
continue.
Okay. So another thing you can see, there is a type of low price preferential shares. So what is low price preferential shares? Suppose your company A has got a share price of rupees 100. Now you have got a particular capacity that you can release your shares at rupees 80 or 60 or rupees 40 and you can buy back by yourself. So this is low price preferential shares. Whether these low price preferential shares are being buyback, that is also to be seen. Sometimes the very big auditors or very big management personnel, without any evident cause, they come out of the company. You must see what is the problem behind that. That is a very important thing. Sometimes it happens after 6 years or 10 years, you will find that there is a cause for this omission. And what Puneet, where is Puneet? I'm missing Puneet. Yeah, Puneet here. So Puneet is a listener now. Probably he was kicked out. So what Puneet was mentioning concalls, I'll add quarterly report, annual report, management analysis, and definitely concall. All those things you have to read between the lines. And remember one thing: what Warren Buffett always mentions, that a company is not a still picture. It is a movie, that is a unfolding movie. Every time it's unfolding. So all these points, these are very basic minimal points. You should see all these points. So thank you.
Thank you, sir. Thanks a lot, sir.
You're most welcome.
Yeah. Also, other point is that Gautam, you will get a lot of ideas into the annual report as well, like Sir said. And there is this one particular point called independent auditors report. And most of the times, what you have to look for is if they are writing anything in specific. How it generally happens is an independent auditor, if he says we are happy with whatever disclosures the company has given, then it means that he is also getting in and vouching for management's honesty. But you often find in certain companies that they will say that, okay, these results we are fine with, but there is this specific line item or there is this specific revised revenue recognition that we are not sure about or we haven't read about or we cannot fully confirm that they are fine. They gave that kind of disclosure in the end of the independent auditor's report. So I think you should also look at such things.
Yeah, I can add few points. There are many shortcuts to see the quality of the management. One such shortcut is you can visit Value Picker and you can type the company name. The best thing in Value Picker is it is arranged in timeline. So you can go to before 5 years, before 7 years by just scrolling, and you can read the articles that people wrote from that time. So you can get the whole picture. Also, uh, you can see the related party transactions. If the company has too much transaction with related party, you have to see that is there any misunderstanding going on. There are many instances. You can follow few Twitter accounts. They easily raise some of the biggest misfortunes that companies that may commit in the future. Uh, I will share few my experiences. There was a company which planned to sell its coal plant at a dirt cheap price, and there was many PR activity that was going in Twitter. But there was one account which wrote everything and what is the deal is about, and it got cancelled, and they have to sell at a higher price. This was one incident I noticed, and
You're just adding while he's connecting. So there are many things that you can actually search, but don't be a maverick in just first space. There are at the very first time you should be a mutual fund investor, you should be a ETF investor, you should be a passive investor. Try and test yourself. Read the companies, read the business, take someone help. There are many people who give advice free on YouTube, but don't follow them because I think so. Dr. Saab would be agreeing to me. Someone has posted some video of LIC, and that was actually a. If someone goes through that, it was such a bad video that. What to say about that? So it's not. Don't try to become a maverick on the very first go. Try to be a mutual fund investor. See what stocks mutual funds are holding. See what kind of companies they invest in. uh, you can always reach out to a mutual fund person or to your advisor and ask why they are investing into banking sector, why they are investing into pharma sector, what is the reason that is driving in coming quarters or in coming years. So this is how you enhance your language, enhance your knowledge. It's not like just jump into one day. And even none of us has like made money in the very first go. In the very first go, who makes money? There are many chances he loses money also. So and it has been such a long journey where after a period of time I am happy to say that I am still alive in equity market. So that would be a very big statement for me. So earning money, not earning money will come, like that comes after a long time. You are in the market, you are alive, and you are getting some returns is most important.
yeah, I was talking about the corporate governance. You can easily go to Google and you can see the court cases. There were I don't want to name the company, but that is a rice company. So they are into money laundering case somewhere
Yeah.
around 2010, and there was an pollution case now. So if these things keeps on coming, that we can easily we have to make double check the corporate governance issues. uh, there are so many companies that have issues, like even there is a big company which sold a big part of its profitable business and is giving it as loan to another company. So there was another biscuit company that is giving money to uh, promoters, another company, yes, a debt. So these are the many things we have to look at. Uh, that's what I feel. And we can easily found the financial frauds by simply reading the value picker itself. A lot of many people are doing great work there. That is a simple shortcut. If we want to go to the final step, there is a separate subject called forensic analysis. There are many books written on it, so we have to read it and practice it. But it's the last part, and it's very difficult. We have to read multiple annual reports, and if we can found a mismatch between 1 year and the next year, we can make sure that there is something fraud is going on. Like uh, fraud, we can't easily cover the frauds, right? So if they are writing something in 2015 and they are writing complete opposite in 2018, like we can easily read and find that out. That's what I'm saying. If it's a big company, many people will do it for us. Let's say if it's a 50,000 cap company or 1 lakh crore company, many mutual funds are will be doing about it, covering about it. So that doesn't have any problem. But if you are going to buy some company that, let's say, 100 crore company or maybe 200 crore company, there might be around only 5,000 shareholders. So there won't be much exposure to them. So if we are going to buy any stake in them, we have to double check. We have to learn the forensic analysis. That's the best way I think we can do. And in my understanding, there was an article by uh, forward his name, Vijay Malik. There was article by Vijay Malik. He wrote in depth about the how each financial statement can be covered and cooked up. Each statement can be easily covered up. The only thing that they can't cook up is the dividend they pay. Except dividend they pay, everything else they can cook up easily. Uh, so that's why even after doing so much analysis and so much reading about the corporate governances, until the mistake comes to public, we don't know. Let's take Satyam company. It was a very big company that many investors are invested, even in the S Bank case also, even in the DFL case also. In the last minute also, there are many big investors going and investing. It doesn't mean that they don't have any information or they can't smell it, because at the end of the day, we can't. It's passive investing, right? We don't have any information, that every information about that company. So we have to keep the asset allocation in place, that even because it protects our capital. We don't have to go to all extreme and saying that that company is good and everything, and we don't have to put our houses on that company, because at the end of the day, we don't know the promoters. We don't know what the company is doing inside. We are just accepting whatever they provides, and even in the last minute it can change drastically. That's what I want to say.
So it was a nice discussion. Learned many things. Hope we can do a second part of this because many things kept untouched. Puneet, your thought?
Sir, it's good to cover this session. The only thing I would like to submit is there are many well-educated people. If someone wants to see, first read their journey. How we also have a Warren Buffett called Rakesh Jhunjhunwala. So he also started his investing journey. We have investors like Radhakrishnan Dhimani. People need to read more before investing. So I spent almost 18 years, 19 years working into mutual fund industry. So there I learned a lot. I was not a direct equity investor at that time. Yes, we had a family business of stock market, but the first thing is अगर किसी समुद्र में आप जा रहे हो तो पहले स्विमिंग पूल में तो तैरना सीख लो. So पहले वो तैयारी कर लें आप, उसके बाद मार्केट में आए. That helps. And the only thing is, don't try to become Robin Hood at very first go. We all have lost money. Let's accept it boldly. So we all have lost money in the early days. We were very good investors. We were actually very good investors, and we actually
Market
became long.
always takes tuition fees.
Yeah, it takes, and we actually become long-term investors
Yeah,
because
definitely.
we had no choice. So from that only we discovered the language of who is actually long-term investor, and it will come. Trying and testing, it's not the thing. It is reading and investing is the thing. So read a lot, you will come up. Have patience, have a process. If you're following a particular process, you're not going to lose.
And that is
So
important. Process.
process, and
The
make your
journey.
investment returns very stable, very reasonable. If you're thinking that you want to earn 50%, boss, आ गया एक साल में ठीक है. Just ask for to the person who has invested just before that 2020 fall, and he has just taken out his money out of frustration in the month of May or June, I think so, where the Nifty was 7,600, 7,700. Just see them. So it's always good. Be a learner first, and it all happens. Just make it reasonable. If you're getting a term deposit rate 6%, 7%, if you are making your returns 10% or 11%, that's more than enough. Even Rakesh Jhunjhunwala says that if I'm getting 15% returns on my investment, I'm doing justice to whatever I'm doing. Yes, I'm taking it to 10 to 15 because I am a little bit more aware in the market. That's it. But he says very clearly and openly, if you're even getting double digit return, you are doing very much justice to yourself. So the need should
Great,
be
great wisdom,
that.
Puneet. That
Yeah.
great wisdom.
Yes, sir. Yeah.
Thank
That's
you.
my closing remark. Yeah. Thank you.
Yogesh sir, any closing remarks on the session?
Yeah,
Yogesh sir is listener now.
yeah. I am I
You
audible?
have to add in. You have to add in.
Yes, sir, you are.
Yeah, thank you. I think, Doctor Sir, please don't call me you, sir. I'm much younger to you. In fact, I'm the youngest one here in the space. So, coming back
Oh,
to the
sorry very much.
no, no, sir, that's fine. So, I mean, on the closing remarks, first and foremost, thank you so much for organizing this. Uh, I mean, just to layer on to what Puneet said, that's a very interesting video of Rakesh Jhunjhunwala where he has actually said that if I earn 15%, I am a king. If I earn 18%, I am a emperor. And if I earn anything around 20%, I am God. So be contented. There is no end to our aspirations to make money. Yes, you should aspire for money, but there is a difference between having wanting to earn money and then undergoing the stress and not enjoying what you currently have. Lust of money is dangerous for all of us, no matter who we are, where we live. So don't be jealous, don't compare your journey with others, don't expect what will happen on 1st Feb at 11 a.m. when the budget is presented. It is not in anybody's control. Take it as it comes. Don't have any expectations in life from anyone, quote unquote. That's the key to happiness. That's what I always think of. We will come and go, people behind us will cry, time will heal everything. Yes, I think spiritual journey is important for all of us. It will enlighten all of us. Sooner the better, because many people think that you have to be spiritual only if you are 50 plus and 60 plus and all that. But that statement presumes that you will live for 50 years and 60 years, but that may not be the case, right? So, I mean, happy investing, stay safe, all of you. Thank you so much.
Thank you.
Thank you, Yogesh sir. It's unfortunate that the accidental investor has to exit midway due to the issues. I hope he'll be there for the next session. He's the one who has motivated us to do it in the first place. And I thank Dhiman sir, Yogesh sir, and Puneet sir for sharing their thoughts and looking
Most
forward
welcome.
to, yeah, looking forward to much more spaces and meaningful conversations where we all can learn from you people. Thanks, Compounding, for joining the discussion, and whoever have joined, have a good day. Thank you.
Thank you.
Thank you.